I call you the go man. Gross output. You like to monitor a different twist to GDP in the form of gross output. And for all of 2018, it was 2.91 versus traditional GDP interpretations at 2.86. What are we seeing now, Mark?
So I see gross output as the top line in national income accounting. It measures sales at all stages of production. It's a fantastic leading indicator, and it shows that business spending, B2B spending, and the supply chain are far more important than consumer spending. And it also is a very good predictor of what GDP is going to be in the next quarter, which is going to be released. The first quarter is going to be released on Friday. And so last year was really very positive. As long as GO and the supply chain is growing faster than GDP, that's a very good sign for the economy. And the Trump administration, Larry Kudlow, is a big fan of GO. And it does look very positive, except this last quarter that was released on Good Friday showed that GO was actually a little bit struggling, and B2B spending changed hardly at all. So that gives us a little bit of a cautionary tale as we enter 2019, and it may be a bit of a struggle this year.
Now, you know, as I ponder reading what you just shared with viewers, what struck me is when I'm monitoring all facets of production, I think that GO is going to be have a bigger impact on potential trade issues that may or may not get resolved in the near future with China. Would that be your interpretation as well, Mark?
Yeah, I think that the trade war is finally picking up, catching on, and or having this negative impact that we keep talking about. And the fact that B2B spending, the business-to-business connections with China and Europe, because trade is nearly 30% of the U.S. economy, that suggests that it's finally having a negative impact. And unless this trade war is resolved, and we're all hopeful that it will, it could have a negative impact into 2019. And it's one reason that I'm rather cautious. I'm still fully invested in the stock market because the Fed has decided to wisely not to raise interest rates this year. You know, the economy, the global economy is struggling, and I think the Fed got ahead of itself by raising rates too far too fast.
Well, Mark, it certainly seems to be the mantra and the conventional wisdom of the moment. It's going to be very fascinating to see the first few quarters after we get a trade agreement.